G'day, fools. I'm Scott Phillips, the Motley Fool's Chief Investment Officer, and welcome to another episode in our increasingly large library of very popular content. In particular, this week, Motley Fool's Stock of the Week, where we cover one of the buy recommendations from the Motley Fool's universe of those buy recommendations to you for free via YouTube and via the Motley Fool Money podcast feed. I will tell you more about both of those in a few minutes. The first thing I want to tell you, though, is how to take and use this advice. I say it every week, and every week I say it's important. So if you're still listening and you kept listening, thank you very much. You know what I'm about to say. If you're new to this, or if you just haven't remembered or haven't internalized it, here we go. First thing, this is general advice only, not personal advice. We'll give you a buy recommendation, but you need to work out whether it's right for you. That's super important. Second thing, we are long-term investors. We don't know or have a view on what's going to happen tomorrow or next week or next month or even next year. We are looking at 3 to 5 years, even beyond that, to find companies we think are going to be market-beating stocks. Don't take our recommendations and try and make money tomorrow or the day after. If you do, you're lucky. If you don't, you're unlucky. We're looking to the long term. We're pretty good over that time frame, at least. Our track record suggests we are. Past performance is no guarantee, of course, but keep that long-term perspective. Lastly, we're recording this in the first couple of weeks of September of 2021. If you're listening to this podcast or watching this video sometime after that, our views may have changed. Now, we're bringing you stocks we think hopefully not going to have a lot of change to them. We are convicted in the long-term prospects of these businesses, but we don't know what circumstances might occur between now and whenever you're watching this or listening to this. And of course, that view may have changed. So use the information. Just remember, of course, that we do reserve the right to change our minds when the information changes, because to do anything else would be completely crazy. I'm joined by Andrew Legget, a regular contributor to these videos, a very valued member of the team, a smart bloke besides, and a nice guy. That's a pretty good group of attributes, Leggett. So thank you very much for spending some time with us on this Stock of the Week episode. And you're bringing us a company that, well, I kind of know a little bit about. You've spoken a little bit about, but I've got to say I'm not super across. I think I know the business, or I think I know what it does and how it does it, but I'm interested to find out more from you directly. The company, of course, drum rolls please, is Hipages, and the code on the ASX is HPG. H for hotel, P for papa, G for golf, HPG on the ASX. Mate, let's just start with an overview of Hipages, the company. What is it that the business does?
Well, I thought I might do this slightly differently, and rather than just jump into what they do, I might take a little bit of a ride in the DeLorean and we'll go back in time. Those days before the internet existed, and what we had, if you wanted to go and find a tradie to come and do something in your house, you had to go to this thing called the Yellow Pages. This big,
I've got to stop you there. I'm going to
book.
assume you actually have never used the Yellow Pages, have you? You've heard this story. Some of us have been around for a bit longer than you have. I used the Yellow Pages back in the day. Have you actually ever used the Yellow Pages?
I have seen the Yellow Pages. I know that they exist. It's not just some mythical relic of the past.
Well, it's a relic, but not mythical. Go on, keep going.
It's definitely a relic now. So those Yellow Pages, for those that aren't aware, was this big, enormous book that was about that thick. And It was obviously yellow. And if you wanted a tradie, you would have to open it up to the relevant, say, plumbing section or electrical section. Every plumbing company was called AAA Plumbing because it was in alphabetical order.
Yes.
And you would have to go one by one down that list in order to find someone that was available to do the job that you wanted at the time that you wanted, and hopefully at the price that you wanted. Luckily, then the internet came along, made it a little bit easier. You could at least search, show me all the electricians. And then that got extended to show me all the electricians in my area. And then review sites came that were allowing you to at least see what other people thought of such tradies. So at each stage, the convenience for the person wanting to fill the job became less, and the amount of information available to them became increased. So what that kind of led to is, despite all of this evolution in increasing convenience and information for the customer, they were still at a big disadvantage because they're still doing the majority of the work, and they know the least about what needs to be done, which opened them up to being overquoted, getting wrong tradespeople out, all of that type of thing. Enter Hipages now, which I think forms the next step in the evolution of this directional arrow of progress, where it's essentially an online portal where people who want something done around the house can go on there, type in what they need to be done, what their location is, how quickly they need it to be done, and their general budgetary, how much they're willing to pay. And then Hipages will find for them up to 3 tradies, and they will get those tradies to contact the customer rather than the other way around. So that immediately makes it so much easier for the person seeking the job. They don't have to do the searching, and then they get all these tradies contacting them and saying, "Hey, I can do it at X price. I can do it at Y price," and then that gives them choice. Okay, well, this person may cost $100. This person's saying $80. This one can do it sooner though, and maybe that extra $20 is worth it to have someone sooner. So it's really increasing the choice for that customer, and for the tradies, it's a great source of leads and marketing and all of that. So that's really making it exceptionally easy, and it's why I like this business, because I'm a big believer in businesses that are really finding ways to just they offer a clear value proposition to both parties. And I think it's easier for customers. It's a great lead generation tool for tradies. And from what I can see, and maybe we can get into this a little bit later, it's fairly cost effective for the tradies as well.
We will get into that, mate. It reminds me, you talk about the directional arrow of progress. You talk about the evolution of what this is. My first thought was, the evolution of search. And it kind of ends up, Yellow Pages, the original search engine, is kind of a funny idea. But if you think about it, it's not even search. It's the evolution of solutions, right? First, it was, okay, well, I got to know what I want. I got to know where to find. I got to make the phone calls, get someone to come out. Maybe they do the job. Then search gets easier. Then, as you say, we're almost moving to that kind of, the old thing of no one wants to buy a shovel, they want a hole. You're not buying the shovel because you want a shovel, you want a hole. And so if Hipages is in the business of delivering the solution, hole in the ground or a fixed electrical appliance or a repaired roof or whatever it is, I speak with someone who wants to have their roof repaired, and I might check out Hipages after this because I do have a hole in the roof that needs repairing. It is the evolution of the solution provision rather than even the search itself. And I don't mean that to sound over the top or too euphemistic, but literally that is the case, right? You simply you want the problem fixed, you want the issue dealt with, and Hipages potentially does that. Let's go to that part of the piece. Let's talk about why you like it. You've done a little bit of that, but talk me through the investment case for Hipages. Obviously, we're saying, look, it's better than Yellow Pages, probably better than Google, maybe better than the review sites potentially. If this is the next evolution, that's part of the story, obviously. If it is the future, you want to invest in the future, not the past. But why else do we like Hipages as an investment?
Okay, so there are a bunch of legs in that. So obviously, I've went over the story, and I think that story in itself is a very compelling one as to why I think this is a good investment opportunity now and over the years ahead. So the way Hipages makes money is very interesting as well. So they've essentially given up some of the potential growth that they can achieve for more regular and recurring, consistent cash flow and revenue that they can count on. So rather than taking a fee on each job that is traded, each job that is filled, and about 1.5 million jobs were filled on Hipages in the last year, they instead charge the tradies a subscription fee. So they have a bunch of different tiers, and the tradies can choose which one they want to choose. Each one as the price goes up, the amount of options available to them, how many postcodes they can service, all of that type of stuff, so they can choose, well, I only want to deal with one postcode, so maybe I just choose the lower tier. Whereas some others, potentially the bigger businesses and the ones that really want to get the most jobs out of it, they can go up to the highest tier and I think have up to about 5 or 6 different postcodes that they will be part of that algorithm that spits out, hey, here's who we think you should hire. So, like I said, they would probably be able to grow revenue at a faster clip if they took fees
Mhm.
from the jobs being filled, because
Yeah.
that means, a trader can only sign up once, but they can do multiple jobs in a year.
Yeah.
So that's basically, I think, to summarize that. But I like the fact that they're going for this consistent approach. Firstly, it offers, I think, greater value to the tradies, and
Mhm.
especially the highest value tradies, because they can go, okay, we're going to budget our advertising for the year at X, and we know that's what it's going to stay, and then we'll see how many jobs we can get from that. And I think at this stage in the cycle, that makes complete sense, because we're still
Mm.
in the early days of this iteration where you know this kind of product is going to be increasingly more popular in the future than it is now. And
Mm.
it's important, I think, for Hipages to establish itself as the dominant player, as the dominant brand in that niche, because as
Mm.
we've seen with other companies like realestate.com, Seek, car sales, getting that market leadership is a really big deal, because you
Mm.
create that network effect where you're going to have the most people searching your site for jobs, which is therefore going to attract the most tradies, which is therefore going to attract, again, more customers and then more tradies. And it's just this self-reinforcing loop that I think in this type of market is very difficult for
Mm.
a competitor to beat once it has that foothold, because it's just
Yeah.
that share of mind. People go, I need to find a job. I know what I will do. I'll go on Hipages. I want to see what houses are for sale in my area. I'll go on realestate.com. I'm looking for a job.
Mm.
I'll check Seek. You know, Once you get to that point, it is you become a really exceptional business, and a very profitable one too, because in this case, being completely online, as that revenue grows, costs don't necessarily increase at the same rate. So as
Mm.
that revenue continues to grow and grow solidly, it's averaging about 20% revenue growth over the last few years. Your profit
Mm.
margins are probably going to increase with that. And then eventually you can expect to have this really powerful, really high profit, high cash flow generation business. And that is what I'm hoping Hipages will become. Now they've talked about also, you know, adding new features in the future to help kind of continue that growth. But
Mm.
the home improvement market is already a huge market. Just think about how many jobs every single day tradies are doing around Australia, and just
Mm.
come up with a figure, and it's pretty enormous.
That's
So
right. That's right.
if Hipages can become that default,
Mm.
that category killer that some of these other similar companies are, like realestate.com and Seek, as I've mentioned,
Mm. Mm.
that's a future that I'm really excited about.
So it's a land grab now that hopefully bears lots of fruit down the track. It's interesting you mentioned car sales too, mate. I think it was CarPoint, but I will stand corrected. Um, it basically said, okay, you can list your car for free then. Okay, just make it free. They were so desperate for traffic, they pretty much undermined their own business model just to get the eyeballs, and it still didn't work because the sellers knew where the buyers were, the buyers knew where the sellers were. If you're a seller, you're like, well, I'm probably not going to take it away from car sales because I want to make sure I'm there where the buyers are. And if the buyer's already there, do I really want to list it a second time, even if it's free? Probably not. And so you see plenty of those job site aggregators, the same thing. When you're going to go to Seek anyway, I could use an aggregator, but why would I bother? All the good employers are on Seek, the good employers are on Seek, so why go to that second party? And I said, when it was free on CarPoint, I'm pretty sure it was CarPoint, and they still couldn't win the war, tells you exactly how valuable that land grab is. And frankly, as you said, we've seen some of the profit growth of some of the car sales and REA businesses before, realestate.com, of course, owned by REA Group. We've seen some of the dramatic profit growth in those businesses because once you've captured the customers, you've got massive amounts of pricing power. So I see the attractiveness of something like Hipages. If they can get there first and own that marketplace, it may well be an unassailable lead, or at least a very, very good chance of it. So it's an attractive idea. Curious as to the valuation, mate, while we're here. How do you see the valuation relative to that long-term future potential?
Okay, well, the thing with also that's worth noting with Hipages is it's a brand new listing. It only It only hit the
Right.
ASX in November 2020. So there's not a
Yeah.
huge history of financials for people to look at and to kind of gauge.
Mm.
But and
That's a good
it
point.
since then too, its share price is up significantly. So I've got no doubt people will look at this and go, "Have I
Mm.
missed? Have I missed the boat?" I
Right.
don't think so. Otherwise, I wouldn't be speaking about it right now. But
Exactly.
I look at it this way, and so it's still in the very early days. It's still
Mm.
building
Mm.
that revenue growth. It's only just kind of ticked into profitability. So,
Right.
PE ratios and all of that are not going to be a huge, um, not going to be a huge thing right now. But
Mm.
when you
Mm.
think through the size of the market and what it can potentially do, and then you also look at what some of the some of the multiples that these sites that I've been comparing it to, your real estate
Mm.
your REA groups and your Seeks and your
Mm.
car sales. Uh, I think I don't think that it's necessarily expensive right now.
Okay.
Obviously, if you're in the game of hoping, that you make a quick fire, you know, whatever, choose whatever percentage comes into your head. This is not going to be one of those companies. This is a long
Yeah.
term story
Yeah.
company. We're hoping that over time this can continue to build and gain more and more of that home improvement market, and therefore getting more and more of those tradies
Mm. Mm.
onto that platform. And that is when that's this company's really going to hit its stride, and that might be 5 years down the track. It could even be a little bit more. Um,
Mm.
it is getting it is starting to really invest in marketing. Anyone who's ever
Mm.
watched The Block will know that you can't go through an episode without hearing the Hipages name or seeing the
Yeah.
logos on the builders' shirts and things like that. They also have a whole bunch of other partnerships with people like Bunnings and the Department of Education and things like that
Right.
that help funnel more jobs onto the platform. So
Okay.
they are really trying to set themselves up as that central figure. And as I
Mm.
said, if it can do that, then I think
Mm.
today it's still an extremely cheap and extremely compelling investment opportunity.
There you go. That is some confident words. So I like to hear that, mate. Let's before we get to so we don't over egg the pudding, at least in terms of the minds of our viewers and listeners. Let's talk about some of the risks. We always do a risk section with every single recommendation we make, and now we're giving one away for free here on the podcast and the YouTube channel. We're not going to deviate from that. So let's go with some of the risks, mate. Just explain to me, if you would, why either you might avoid Hipages or simply some of the things you're looking at and making sure don't go wrong that might otherwise necessitate selling that position.
Well, as I said, it's still early days, both in Hipages' life as a listed company. So we don't have that
Mm.
long history that many investors like to see in order to kind of understand its true financial position. There's still a couple of years after IPO, there can still be some little quirks
Mm.
that are
Mm.
available with IPOs, and like people selling
Yeah.
out, all of that type of stuff. Uh,
Yeah.
so there is always going to be that little bit of murkiness now,
Hmm.
but also looking at it elsewhere, just in its product life at the moment, it's still relatively young, and a lot of this market at the moment is still going through the older channels rather than through high
Mm.
pages. Now, the risk
Mm.
is that it doesn't change. People just will continue to go, I'll just Google plumbers near me and see what pops up. And, I can read the reviews, I can make that choice, and I'll just call them and do that. The other risk
Yeah.
is because it's early, someone could come along with a better mousetrap, a
Hmm.
better way of things that even High Pages is doing, that just all of a sudden gets everyone's attention, both the people trying to fill the jobs and the tradies that are going to do the job. And
Right.
this network effect, which we've seen in the past, and you only have to think of names like, MySpace, for example, once had a huge
Yes.
network effect.
Yeah.
Now no one uses them. I've always
Yeah.
said, the good thing about network effects is they can put you in a really strong position in your industry.
Mm.
The bad thing about the only thing that network effects really kind of protect you, though, when things get bad, is this long and slow decline. It typically,
Yeah.
when something like this gets beaten, it tends to be done really quickly. So that's probably the biggest risk at the moment. And there are other companies that are trying to do this, both in that niche that Hipages is focused on, as well as bigger companies like Airtasker that are trying to like
Of
be
course,
that
right.
that services portal for like anything. Whether you want someone to walk your dog or someone to paint your house. You know, so there is a bit of a kind of, it's going to be a bit of a wrestle over the next few years to see who can come out. I think Hipages, with its single focus, has a good chance of being that for the home improvement market. The other risk that comes to mind is reputation risk. Now, Hipages isn't liable for the work done by the tradies that take a job on that platform. But if you get a dodgy builder coming in, and it doesn't matter whether Hipages is liable or not, your trust in Hipages is going to go down. And that's something they have absolutely zero control for. They can say that, we review kind of our tradies, and if we get complaints and things like that, we can look into it. But at the end of the day, you might not get a second chance with most customers. So that's another one. And generally as well, we've got just general economics, the general economic situation. If people aren't comfortable wanting to do home renovations or spending money, to do things to their house, it doesn't matter how good Hipages is. And I mean, that's true for most businesses, really, but
Yes.
it's just something to think about. There is going to be a cyclical element to Hipages because, if we're in a poor economic climate and everyone's worried about, where the next dollar is going to come from, you have a choice of, I can feed my family or I can paint the house. That's a pretty obvious, there's a pretty obvious winner to that. So those are the main risks. And then, I'll just talk about churn, customer churn, or, in normal speak, the tradies that sign up and then just say, this isn't valuable enough to me, I'll do something else. Obviously, because it's a subscription revenue business, its key driver is going to be how many tradies sign up to that, because it is not clipping those fees off every job. It is just getting more money from signing up new tradies and getting its existing tradies to sign up to higher tiers of membership. So it needs to continue offering that value proposition for it to keep growing. I think monthly churn is about 2.5-3%. I think they kind of what they call their acquisition costs, customer acquisition costs, using an annual churn rate of 35%. That feels quite high. They say that is overstated, but obviously because it's early days, that it could, there's a very good chance that comes down in the future, and I hope so. I think that would again be a big driver of value. But if it can't keep tradies, and definitely can't keep its highest quality tradies, then kind of the whole promise of Hipages gets really, really difficult to deliver on.
Nice one, mate. You've summarized the risks beautifully. We come to that part in our episode where I ask you to spend, well, I say 60 seconds, ends up being somewhere between 30 and 90, as I joke every week, to give us our elevator pitch, mate. If you were stuck in an elevator with an investor and you had to make a 60-second pitch between floors 1 and, I don't know, how long does it take? 417, 432, to buy shares in Hipages. Wrap it up for us, mate. What's the elevator pitch for an investment in Hipages? The code is HPG.
So Hipages is a company that is, in my view, offering the next iteration of evolution in its particular market. It is fixing some of the inefficiencies by forcing a lot of onus on the people that have the least amount of information in order to decide which way to go. And that is going to put itself in a very powerful position. If it can keep growing, it has the potential to become the de facto kind of the category killer in that industry, like we see with Seek and Employment, for example. And with that, not only should the company continue to grow at a rapid, I won't say rapid, but at a decent rate, over the next 5 to 10 years, but take up more and more of an enormous market. And with that too should come increased cash flow, increased profits, all the things that help drive a share price higher because the value of the business is getting higher and higher along with it.
There you go, fools. Andrew Legget with a very smart, very thoughtful, and very informative take on a business that I haven't looked enough into, Hipages. I might, as I said, use them this afternoon to check in on how I can get my roof fixed. I had a branch come through it. I guess that's the benefit too, mate. It's not cyclical, right? If a branch falls off a tree and puts a hole in your roof, you're going to have to replace it because whether you want to feed the kids or not, they're going to get wet. So it has some degree of at least counter-cyclicality, or at least acyclicality at least. Fools, thank you for spending some time with us. Go on.
I was just going to say, unless you want a new water feature.
Exactly, that's right. Not an attractive one at that. Well, thank you for spending some time with us on this week's Stock of the Week. You can get more from us right across the socials. If you're already on the YouTube channel, check out our podcast, Motley Fool Money. Just search for that in your app store. And if you're listening to this on the podcast, thank you for that. Don't forget to check out our YouTube channel because there's plenty more where this is coming from, including Stocks in Focus, including our media appearances, our favorite investment books, which is a new and pretty popular new series. I've got a couple of ideas too, Andrew. I'll be hitting you up after this for a new video idea. So stay tuned for that. Jump on the YouTube channel and see where Andrew pops up next. If you're on Twitter, you can follow Andrew. It's just at Andrew Legget. Am I right there, mate?
That's it, yep.
Beautiful. At Andrew Legget. You can follow The Motley Fool on Twitter or Insta at The Motley Fool AU. You can follow me on Twitter or Insta at TMF Scott P. If you're on Facebook, check out Scott Phillips Money or The Motley Fool Australia. Just whack those in your search bar on Facebook and you'll find both of those pages. Thanks again for watching, fools, and until next time, fool on.